Hello traders, this is Rich from Tradesight. This is the market preview for the coming session. This is going to be for Thursday, October 24th, 2013. We had a down day across the board, but all things considered, I think the damage was relatively contained after the episode with the risk off in the high beta names yesterday. The market internals were modestly negative on both sides, but we did get a big pop in the New York trend that closed at 1.77. That's going to keep that in the average for 10 days and potentially elevate the trend to an oversold condition if we get a couple more high readings. But without further ado, let's take a look at the ES chart first. All right, so here's the ES chart. We hit that 1750 area yesterday on 9 days up, and as expected, it was bull repellent as we we're kind of looking for that first touch of the 1750, especially in combination with the 9 bars up, really kind of repelled the market. But the market did a pretty good job of not closing on the day's low. The negative, though, is we did settle below the day's open, so we do have a negative candle on the day, both in price and the open-close deviation. Levels at hand, 1750, obviously to the upside, and then the previous day's high at about 1754. To the downside, this little gap window here is definitely going to be key support at 1730 and a quarter. Looking at the NASDAQ futures, NASDAQ still grappling with 13 bars up here at the 8 ace level. If we do continue to the upside, will be the secondary level of resistance after the risk level. That's the magenta line. The magenta line is coming in about 3380, 3381. To the downside, this gap level where it starts with the window here is going to be key support, and then a potential break level if we lose that, and that's coming in at 3312 or so. On the bond front, bonds today continued higher with a little more risk-off type of posture being put on by the market. We're only 6 days up now, so this 6 days level and potentially even the 7 days level or more is in play before we get to a full 9 bar run to the upside. I want to take a look at the major commodity futures right now. We undercut the 200 DMA in the previous session on a closing basis, and today we expanded the range to the downside, which is a little bit unusual. Usually that 200 tends to be gamed, but we're really starting to release the energy out of this pattern here. So we've lost the 4/8 level. We've followed through below the 200. So the next real point of reference here is 93 3/4 at the 2/8 level here on the Murray Math box. If we pivot back to the upside, we're going to have a little bit of resistance at the 200 and then pretty formidable resistance here at that 4/8 level at 100. That's the low of this consolidation range and also the 10 EMA right now. Looking at the gold futures were higher on the day. A little flight to quality there for sure. But nothing really too special. We hit the 50 on the previous session, but we maintained the top one half of that range to the upside. So the 2-day move is to the upside with just a little kind of a measuring day inside yesterday with that small down day that we had. So what you want to be on guard for would be a break above that 2-day range and above the 50, which is going to put the 8 ace level in play at 1375. To the downside, we're going to have a key support at the 10 EMA at 1312 and a half. Here's a look at the 10-day trend. That's the moving average on top here. This is the S&P on the chart below. You can see that we did curl up to the upside here, but we're basically still just mid-range, even after getting that very high reading at 1.77. So there's plenty of fuel in the tank here before we get anywhere near oversold in the market here. And of course, if we do want to pivot to the upside, we're nowhere near the 0.85 overbought threshold either. Here's a look at the TLT S&P cross. Definitely saw a little bias in favor of the bonds today. This ratio moved to the downside. When this ratio is moving to the downside, that means we're getting better performance out of the bonds versus the broad market equities. So right now, we're potentially setting up a lower high here that we don't have confirmation yet until this swing low has been taken out. All right, so here's a look at our multi-sector daily chart. You can see we have some pretty decent performance today out of the XAU relative to the others. Big decline today was certainly in the semiconductors. That's the SOX. That's this blue line. You can see that they were really hit very hard today. Take a look at that chart in just a little bit. BTK, which is the red line, had a reasonably positive day, but we also had some pretty decent weakness in the banking index. So kind of a quasi risk-off day, at least from the market crosses here from the different sectors. All right, so here's a look at the sectors ranked from best to worst. Certainly the SOX that we talked about was the worst performer on the day. The gold and silver index was also fairly weak. The OSX was also kind of buried down here at the bottom of the list. Conversely, at the top of the list, the transports were definitely strong and definitely outperformed the broad market, being really the top real broad market index on the day. The defense index did outperform, but that's kind of a narrow sector, and it's actually really pretty small. BTK here was for sure the top NASDAQ sector on the day, and the housing sector was also green. So the bulls have a couple things to point to here today, saying that all things considered, today wasn't that devastating of a down day, especially having the signals in place with the 9 bars up in the ES and the 13 bars up on the NASDAQ side. That doesn't mean that more momentum will not manifest itself to the downside later, but for now, that still remains to be seen. First chart we want to take a look at is the XAU. The XAU drove up to the static trend line here from the seeker setup phase to the downside, so it hit that level, which is going to be formidable, especially in combination with the 50 DMA. That's the red line here. So we basically just had an inside day in the XAU. So once this resolves itself, we're going to have probably a pretty powerful move. So don't miss that, and definitely have some ideas on your watch list for that. Best sector on the day was the transports on the broad market side. We've got this seeker count to the upside going. We're trying to push above this 8 ace level. We're going to have some real strong resistance at 7,031, and the ultimate resistance here at plus 2 ace if they can get all the way up there at 71.87.5. The oil services index was very weak on the day. Took a very big hit. We've got some pretty good range expansion to the downside. We settled at the 10 EMA and actually touched the 4 ace level here. So you can see that right now this move is very technical and is using our levels very well. So if we release to the downside and follow through below the 4 ace level, the static trend line here from the seeker setup phase is going to be in play at 274, 275. To the upside, the high water mark here of this move is going to be 291.5, which will come into play, and then the next thing is going to be the 6 ace level here. I think the one thing to really be aware of, though, is the move in the SOX, and this is what we're going to close with today. SOX index had a very sharp break to the downside. We have this 1 through 13 seeker countdown phase. We broke on a gap to the downside, and we actually made a new low close on the move with this close here. So in one candle, we covered up the entire countdown to the upside. So this is very weak price action. Next support is going to be the 6 ace level at 484, 485. If we release below that, the next real meaningful support is going to be 4 ace at 468 3/4. There's always the possibility that we could pivot back to the upside here. If we do so, today's high water mark is going to be really key, because that's the gap window here between here and where we got the signal. So next resistance is going to be the high of the day at 497.5. So a couple levels to keep in mind there, and definitely prepare for kind of an inside day, a measuring day in the SOX. I'd kind of be surprised to see this follow through to the downside immediately, especially after this move was so abrupt and impulsive. The markets generally like to kind of do a little square dancing here and kind of size each other up before they really get to business, but we'll see. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.